Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is May 10th, 2015. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's take a look at current market trend and our strategy. US stock market is in a correction right now. Very few leading stocks are holding up. Most stocks has come down. I'm currently still long the oil ETF and a very few leading stocks with a very small position. Most of my funds are in cash. Let's take a look at the market indices and their charts. German DAX index, as you said, it broke down, as you can see here, break down below the 50-day moving average and rebound a little bit, but still below 50-day moving average. From trend point of view, this index may have turned into the downtrend for the time being. We don't know how it's going to go next, but previously DAX is in the uptrend, now it's going down. Nasdaq index also came down, although it rebounded above 50-day moving average on Friday, but the volume is low. That's not a convincing follow-through day. It's just a rebound from the oversold condition with a low volume. So it's we still need to be very cautious about the market. Mid cap did the same. It's below 50-day moving average. Small cap below 50-day moving average. SP 500 large cap. This is the best index overall. However, on the up days, volume is still lower than the down days, so it's need to be very cautious. Gold index, gold price is still in a downtrend. Silver also in a downtrend here. Gold mining stock ETF, short term it's in the uptrend. It hits 50-day moving average. It may rebound a little bit, but this is a very difficult chart. Very difficult to long this one because the long-term trend is in the downtrend, even though the short term is going up, but you're still fighting against the long-term trend. US dollar, this is significant. US dollar had been in a uptrend for a long time, but starting from April, the trend has reversed. It didn't hit the previous high, but it broke the previous low. So now it's going down. This is a long-term trend change. So US dollar has broke support and it's going down. It's making a trend reversal. It's going to the downtrend. Other foreign currencies such as Canadian dollar is against US dollar is going up. So those are the weakness in US dollar and need to be noticed. And especially for people who have savings in foreign currency or for whatever reason they need to change to the foreign currency. Right now is the best time because going forward US dollar is more likely to continue going down. Crude oil made a trend reverse back in April as well. This is a double bottom. From a weekly chart is more obvious. Let me show you the weekly chart. See, look at the weekly chart. Crude oil had a very significant downtrend. It's a very long-term downtrend. And however, it just let me get the volume. Okay. Look at there. This is a double bottom, and the second bottom is lower than the first one. So on April, it broke out from the double bottom, turning up. This is a weekly chart, therefore this is a relatively long term. And from a chart analysis, the trend analysis point of view, it made a double bottom and going up. So this is a trend reversal. Crude oil has going to the uptrend, reverse from previous downtrend. So this is very significant. Okay, let's go back. This is crude oil. This is a daily chart. The reversal happens when they break about $54 right here. That's when the reversal happen. Right now it's going uptrend. Even though short term they pull back, but the trend is gonna help it. Shanghai Stock Exchange Index broke down 30-day moving average, but it seems finding support on 30-day moving average. Those are the three ETFs that's tied with the China Asia stock, ASHS uptrend. CNXT, this is the best performing ETF uptrend. FXI, still in the uptrend, but short term is consolidating. YINN, this is a 3 times China ETF, 3 times. This is very risky, but if you get it right, you can make a lot of money. But if you get it wrong, if the timing is wrong, you can lose a lot of money. So it's highly risk. It's high risk. IYR is a U.S. real estate ETF. Right now it's in a downtrend. You see this peak is lower than the previous one. It just keep going down. JJC is a copper ETF. Is reversed. It's going uptrend. MBB is a U.S. mortgage bond price. It's inverse correlated with a U.S. mortgage rate. Right now this is going up. It pulled back a little bit, but rebounded. So mortgage rate is still in a downtrend. SMH is a semiconductor ETF. Right now it's consolidating, short-term consolidating, but the trend is going up. Social media ETF, it pulled back pretty hard. Solar ETF, it breaks down 20-30-day moving average, but found support on 50-day moving average. We have to see, usually the chart like this, they will spend some time consolidating. It may break down or break out to the upside. We don't know. So it's consolidating. We just have to wait. USO is a this is a crude oil ETF. It's tied with the crude oil price. It's in uptrend. And this is in uptrend. It did the same as a crude oil, had a double bottom and break out above the double bottom. So the trend has reversed. Crude oil is going up. XLE is a in energy sector ETF. Right now it's consolidating here. From a trend point of view, it's in a short-term uptrend, but it's in consolidating. XLF. Financial ETF consolidating in a trading range, and which is a good sign. This one did not break down. That's a good sign. There are some stocks I like to show you. The first group of stocks are the stocks in uptrend, but they're too extended to buy. Umbrella, AMBA, MLM, DATA, and Palo Alto Networks, PANW. Those are the stocks I have shared with you previously when they were in a buy range, but right now they're not in a buy range anymore. And if you have bought them, hold on. But if you haven't bought them, it's too late. You have to wait for the next buy opportunity. Second list of the stocks are the stocks that broke out, but they're still in the buy range. AYI and Alta, ULTA. And another stock that's possibly turning around, GoPro. GoPro was in a downtrend. Now it's making a base. It's possible it can turn around from here. So it's on my watch list. A fourth list of stocks that's totally in trouble, and Monster Beverage, MNST, Twitter, and LinkedIn. Those are the stocks. If you bought them, you really have to know how to stop loss and get out. When they first turn around going down, you have to get out. The longer you hold on to them, the more money you lose. Okay, I like to show you the chart. Let's look at the first list of the stocks. Umbrella. Umbrella is in the uptrend, but there's no buy point right now. So it finds support here on 50-day moving average, but we missed all this buy point. Previously, they have all this buy point. If you have bought them and hold on, but if you haven't bought them, there's no buy point right now. MLM. This stock buy point is $146.31 and 5% above buy point. So if it's within $153.63, it's still within 5% of the breakout pivotal point. It's still buyable. You look at this nice flat base. That's how it breaks out with a high volume. So this is a breakout pivotal point. But right now we are out of the buy range. DATA data. And this one, the breakout pivotal point is right here, $99.39. After it broke out, it pulled back, but find support at 50-day moving average. And then, well, actually, this is 200-day moving average. And then after earning, it broke out with a gap up, with a strong gap up. High volume. So if you have bought it here and right now you can continue hold on to it. If you haven't bought it, you just have to wait for next opportunity. It's too late to buy right now. Let's take a look at Palo Alto Network, PNNW. This is a very strong uptrend. Every time it hits 50-day moving average, it just keep on bouncing back up. They have several buy points. This is a base, this is a base buy point, another base buy point, another base buy point. And right now it has already gained 20% from the last buy point. So it's a profit taking area. And there's no buy point. If you have bought this, actually you should be taking profit right now. AYI. Okay, now the second list of the stocks we should keep a close eye on. Those are the stocks, there are only two stocks, they're in the buy range. AYI, this is in the buy range. This is a flat base, 172.86. That's a pivotal point. So that's a buy point. Right now it's within the buy point, 5% of the buy point. So AYI is one can be bought. Another is Alta Salon. This is a flat base. Breakout pivotal point is $156.10. But after it broke out, it pulled back to the flat base again. Right now, it's still within the flat base, and it's finding support on the bottoms of the flat base, $150. So this is a stock's worth of attention. Now, fourth list of the stocks that's seriously in trouble, Monster Beverage. After earning report, it broke down. So previously, it looks like it's a breakout above the flat base, but after earning, it just break down. So the way how to treat it, this kind of stock, is if you bought it here, you gotta have a stop order, which is on the bottom of the flat base. So on the earning day, you could just get out around $135 range. That's if you bought it at $145, and you should be stopping out around $135. So that's the way how to treat it. How to treat this stock, you just have to take a loss when the loss is small. Because if you don't take the loss when the loss is small, you're going to have a huge loss. So that's something we should prevent. Okay, now looks at Twitter. Twitter had a cup with a handle breakout right here, which is a beautiful breakout, $50.11. It looks like it's going up, but suddenly it turned down. So the stop order should be somewhere below $50, and then you could have got out if you have a stop order right here. And so this kind of stocks, all the stocks, in fact, you must have a stop order. And if the stock turn around and go down, there's nothing you can do but to get out. We really cannot change the movement of the stock. We can only control our portfolio so we don't lose a lot of money. So Twitter is in trouble. So there's no way we should be holding on to this stock. Another stock in trouble is LinkedIn. LinkedIn has several buy points. You see, it looks like you can buy them. You can buy them here. And then there's another flat base. Looks like it's making a flat base, but who knows? I mean, it suddenly had a gap down. And this is a stock, stop order may not protect you. Stop order cannot protect you from the gap. If you have somewhere below this low point in, you already lost tons of money by the time you get stop out because of the gap. So what do we do here for this kind of stuff? There's really no way. So it just don't try not to hold large position over earning. When we have any kind of surprise event can make the stop potentially either gap up or gap down. You don't know which direction it's gonna do, and the best way is not to hold large position over the earning. So those are the list of the stocks I like to share with you. What to do in current market and get out of stocks that are in trouble and reduce the long position size. And it's perfectly okay to stay in cash because the market is not very stable right now. It's in correction, so we should be very cautious when we buy stock. That's all for this week. See you next week.